This is Nightly Business Report with Tyler Matheson and Susie Garrett.
Stunning departure. The man who built Pimco into a bond powerhouse, running funds that are a staple in many retirement accounts, is leaving. What should shareholders do now?
5 in a row, stocks rebound. The Dow Index sees its 5th triple-digit move this week, and our market monitor has a list of stocks to buy in this market.
And secret Fed audio tapes. Recordings have surfaced that the New York Federal Reserve likely doesn't want you to hear. All that and more tonight on Nightly Business Report for Friday, September 26th.
Good evening, everyone. Stocks on Wall Street bolted higher with the blue chip Dow closing out the week with a solid triple-digit gain. We'll have more details on that a little later in the program. But we begin tonight with the story that shocked investors around the world and rattled the bond market. Bill Gross, the bond king, the man who could move markets and was often compared to legendary Fidelity Magellan fund manager Peter Lynch, is leaving Pimco, the firm he founded more than 40 years ago. He's heading to Janus Capital Group, where he'll manage a new bond fund for the much smaller firm. Now, Gross's sudden exit sparked a knee-jerk sell-off in the Treasury market. Pimco's closed-end funds were hit hard. The Pimco Total Return ETF fell slightly, and Morningstar placed all rated Pimco funds, including the flagship Total Return Fund, under review. But at Janus Capital, its stock soared 40%. And Allianz, Pimco's parent company, was down 6% in Germany. For many investors, Pimco funds are a mainstay of 401k and retirement plans. So who is Bill Gross? Why is he so important? And how did he get to the point of leaving the firm he founded? Jane Wells has more.
You get that Washington package.
Bill Gross has been king of the world, at least the bond world, making investors oodles of money in the 32 years since he created Pimco, building up a company with $2 trillion in assets, starting the largest bond fund on the planet, averaging nearly 8% annual return since inception, and turning this former Navy officer into a billionaire.
But he's a true giant in the industry. He's a true legend.
But this has not been a legendary year.
Mohamed Al-Arian, a familiar face to NBR viewers, is stepping down as CEO and co-chief investment officer at Pimco.
In January, the man who helped run Pimco, Gross's heir apparent, abruptly left.
There's no clash of personalities here. We got along real well.
Investors didn't like it and began pulling out money. Personnel changes included rehiring former portfolio manager Paul McCulley, and parent company Allianz at least publicly continued to stand by their man.
Is Bill Gross past his sell-by date?
I think Bill is working hard on the recovery.
But behind the scenes, there was talk of a brewing revolt. And then this week, the launch of an SEC investigation.
Regulators are reportedly investigating whether bond giant Pimco artificially pumped up the returns of one of its popular funds.
Finally, the man who once turned $200 into $10,000 at a blackjack table in Vegas decided to fold him at the company he built.
I don't shock easily, but I was surely shocked when I heard that basically as soon as I got in the office about 8:30 this morning.
Bill Gross said in a statement, it's time for him to focus on the pure aspects of portfolio management at a smaller firm. He has chosen Denver-based Janus, where the king hopes to regain his crown. For Nightly Business Report, Jane Wells, Los Angeles.
Joining us now to talk more about Bill Gross and what his departure means for the bond industry, for Pimco, and for investors wondering what to do with their money are Michael Herbst, Director of Management Research at Morningstar, and Tim Spies. He's partner and personal wealth advisor at Eisner Ampner. Welcome to both of you. Michael, nice to see you again. How crippling is this to Pimco, or is it at all?
Bill Gross obviously has had a huge impact and a huge imprint on Pimco's investment strategy across all of its funds. But this is far from a one-man show. The research depth that he has at his disposal and that his successors will have at their disposal is virtually unparalleled in the bond industry.
Tim, do you agree with that? I know you were getting a lot of calls from your clients today asking, what should I do with my Pimco funds? What were you telling them?
Well, first, they have to do due diligence on where they would go as far as where to place it. But the other matter is that it's very likely or possible that the continued outflows could occur. Almost $63 billion has come out in the last, say, 16 months from the Pimco funds.
You know, Michael, you say that it's got a deep bench, that they've got great research capabilities, but you all at Morningstar put not just Pimco Total Return Gross's main fund on watch. You put all the funds that you rate on watch. Why did you do it?
Well, that reflects the imprint and the impact that Bill Gross has had on the firm and on the investment processes that carry across multiple funds. What we're focusing on here will be the formal repercussions of his departure. We expect further news from Pimco later today on his successor. But there's also going to be some unofficial or less formal repercussions, too, in terms of the mix of responsibilities, how the investment process might get adjusted in the wake of his departure, and what day-to-day execution of that strategy looks like.
You know, Tim, bond investors are a very conservative bunch of people. And while all of this uncertainty is hanging over Pimco, aren't you better off just taking your money out of Pimco and parking it someplace else?
That could be true, but we shouldn't forget that over the past 10 years, Pimco's returned 6% in their fixed income funds compared to, say, the benchmark of around 1.5. So they still have a very compelling story to tell. They have a lot of talent. Although any investor should go through their own due diligence process, their aversion to risk, their investment horizon, understand the duration. There's a whole process that an investor should consider whether they stay or leave Pimco.
You know, Michael, I heard you on your Morningstar broadcast earlier today that inevitably, you said, a level of chaos ensues when something like this happens at a company like Pimco. This is a company that has today lost its voice, its principle, the face of the company, and it has lost its leader.
Well, it's certainly lost its most public voice, but there's plenty of people that have supported Bill Gross over the years, including the deputy CIOs that were named earlier this year when Mohamed Al-Arian left. What we are trying to do is assess what the impact on those people will be. That is, ultimately, this is a group of people making decisions with each other day in and day out. Changes to how that occurs could be material for the funds. So we are reassessing our views once we have a little bit more information and can apply our judgment to what the new reality will be.
Mm-hmm. Tim, as Mike said a moment ago, Bill Gross has a great track record. You said the same thing. Does it make sense to follow him to the new fund, to Janus? Would you recommend that to your clients?
We're not recommending any funds. We're in the business of helping our clients conduct due diligence, but I would say an infrastructure is going to need to be built there that would rival amongst the best funds in the world. Remember, Pimco is amongst the largest in the world. Janus has not quite attained that status yet.
Yeah, but Bill Gross is the bond king.
True, but as you've heard the other commentators say, Mr. Gross had a deep staff and a deep bench.
Michael, final question here. One of the leading contenders to succeed Mr. Gross is Dan Ivascyn. He won your Morningstar Fixed Income Manager of the Year award. We don't know whether he's going to step in at Total Return, but he very well might. Quickly, what do you know about him?
Dan Ivascyn has been responsible for heading up the mortgage effort at Pimco, which touches most areas of the firm and actually gives him a great lens into some of the macroeconomic considerations that Bill Gross is rightfully so well known for. Dan Ivascyn is well regarded by past and current colleagues as well. And should he step into that role with the other folks supporting him in their existing roles, that brings a level of stability to the funds that would have us essentially urging investors to catch their breath for a moment rather than leap to any immediate decisions.
All right.
That said, we'll be looking to see how this unfolds in coming weeks.
Gentlemen, thank you very much. Tim Spiess of Eisner Amper, Michael Herbst at Morningstar.
More on the markets today on Wall Street. It was a fitting end to the week. The Dow had another triple-digit move, its fifth in a row, rebounding after yesterday's sharp sell-off. The blue chips got a big boost from Dow component Nike. Shares jumped 12% on those strong earnings that we told you about last night. Helping investor confidence, the Commerce Department's report that the economy grew 4.6% in the second quarter, much stronger than the prior estimate. Consumer sentiment also rose in September. So let's take a look look at the closing numbers on Wall Street. The Dow gained 167 points, the Nasdaq rose 45, and the S&P up 17 points. But today's rebound wasn't enough to erase losses for this very volatile week. The Dow fell 1%, the Nasdaq dropped 1.5%, and the S&P off more than 1%.
Some alarming numbers on the state of the nation's public pension funds. Moody's says the pension gap, the difference between what the funds have and what actuaries say they should hold to meet obligations, has tripled in less than a decade. It's now at least $2 trillion. That's more than half of all outstanding state and local bond debt, by the way. Despite recent gains of almost 7.5% on average on their investments, the plans don't have enough money to pay what they owe current and future retirees.
Still ahead, why the fight on terror is bringing together two very different groups, the U.S. military and advocates of the virtual currency Bitcoin. We'll explain right after this.
Secret tapes. They're usually straight out of Hollywood. Today, Wall Street has its own version. Audio recordings obtained by the journalism group ProPublica of meetings between the Federal Reserve Bank of New York and Goldman Sachs allegedly show what many Fed critics have been concerned about, that regulators may be too cozy with those they oversee. The tapes were made by Carmen Segarra, a former New York Fed bank examiner who worked out of Goldman Sachs. That was the bank she was assigned to in 2011 and 2012. Segarra says she found cases where Goldman appeared to be engaged in questionable activities, but then felt pushback in her attempts to correct them. In one case, Segarra concluded that Goldman did not have the required firm-wide conflict of interest policy. She then began recording numerous meetings, roughly 45 hours worth, when she felt her opinions weren't going over well with her bosses back at the New York Fed. The Fed, by the way, categorically rejects the allegations. Goldman Sachs refutes the notion that there was no conflict of interest policy in place. Segarra was let go after 7 months and then sued her former employer. It's also worth noting that in 2009, the New York Fed commissioned a report to look at its role in the financial crisis. The report, conducted by a Columbia University finance professor, concluded that the biggest issue the New York Fed faced when overseeing some of the country's biggest banks was its own culture, where examiners didn't speak up and where supervisors pay excessive deference to the banks. This is a story that is likely far from over.
Well, here's another fascinating story. This week, in the first meeting of its kind, members of the United States Military Special Operations Command met with advocates for Bitcoin, the virtual currency that's not regulated. Now, the reason it was to learn more about how terror groups like ISIS are being funded and whether they're using things like Bitcoin and what can be done to stop it. Eamon Javers was the first to report the story, and he joins us now from Washington. So, Eamon, fill us in a little bit. I mean, to what extent is ISIS specifically using Bitcoin?
Well, what Special Operations Command told me about ISIS was this is a group that's by and large using the traditional finance measures like, cash in a suitcase, illicitly selling oil on the black market. But they said that ISIS is active on what's called the dark web. That's the part of the internet where people can exchange things, participate in black markets. And so they are concerned about groups like ISIS around the world having access to cryptocurrencies that exchange over the internet, exchanging value, laundering proceeds from illicit activities, and potentially raising money for terrorist activities. That's why Special Operations Command said they were eager to meet with advocates for Bitcoin so they could understand a little bit more about it. And the big thing the U.S. military told me is what they want to be able to do is track Bitcoin over the internet. That's not something they know how to do right now. They want to learn how to do it if they can. And of course, civil liberties advocates and Bitcoin folks who tend to have a libertarian mindset bristle at the idea that the U.S. government should be doing anything to track some of these cryptocurrencies around the world.
So what do they really hope to learn here? Repeat for me.
What they really want to do is figure out how to track Bitcoin. That seems to be the main goal. They also want to understand how it works, how many of these so-called cryptocurrencies there are. Bitcoin is just the most well-known of a large group of cryptocurrencies. This whole area of internet finance is something that the military does not know well, they say. They felt like they had an information gap, and they wanted to bring in some of the world's best experts, and that's what they did on Monday down in Tampa, right near MacDill Air Force Base.
What a cast of characters. Thank you so much, Eamon. Eamon Javers from Washington. Turning now to Wall Street, BlackBerry posts another loss, but it was smaller than expected, and that's where we begin tonight's market focus. The smartphone maker's cost-cutting efforts helped its profit margins in its latest quarter. Still, revenue was short of estimates, but the CEO says the company will double its software revenue next year. Shares rose more than 4.5% to $10.26. An activist investor is taking aim at Yahoo. Starboard Value sent an open letter to the tech giant CEO, Marissa Mayer, outlining ways for the company to unlock shareholder value. One of those suggestions was to combine with AOL. Yahoo shares rose more than 4% to $40.66. That also sent AOL higher by more than 3% to $44.55.
Shares of Finish Line tripped and tumbled in today's session. The shoe retailer reported disappointing results. Its profit ticked down in its second quarter as higher costs and expenses and write-downs cut into sales. The stock down more than 14% today. It finished at $25.11. Hedge fund Standard General is in talks with lenders working on a plan to improve Radio Shack's cash position to help the company avoid bankruptcy. This, according to a securities filing. The struggling electronics retailer warned investors earlier this month that it is running out of cash and could have to seek bankruptcy court protection. The news gave investors some hope today, sending shares of Radio Shack up a big 19 cents to 99 cents.
Our market monitor tonight says investors need to be more selective when choosing stocks in today's market. He's David Rainey, portfolio manager with the Hennessy Focus Fund. David, welcome to Nightly Business Report. I understand that your fund, you called it the Best Ideas Fund, and you've got a couple of your best of the best to tell us about. Let's start with O'Reilly Automotive, ORLY, trading at $151. Why do you like it?
We've been shareholders in O'Reilly for the last 8 years. They're superbly managed. They've had great same-store growth in this country as well as store growth. The store growth count has gone from 1,400 8 years ago to about 4,000, and we can still, and it will likely reach the 6,000 unit mark in the next 5 to 7 years. Today, O'Reilly's trading about 17 times next year's cash earnings. We would expect the share price to grow in line with cash earnings for the next 5 years.
It's a crowded space, though, isn't it, David? There's Napa, there's Advance, there are a lot of them.
You know, O'Reilly's unique because it has a dual distribution model that serves both the retail and the wholesale customer. It's the only one of the big three that have found a way to do that and do that successfully over many, many years, and it's allowed it to grow in areas of the country that other firms have not been able to.
Second choice, not necessarily second in your heart, is American Tower, big cell phone company.
Right. American Tower is the large cap name, about a $38 billion market cap in here. It's a name we've actually owned in the fund for the last 15 or so years. We've seen several CEO transitions and CFO transitions. The business continues to hum on all cylinders. They're benefiting from the growth of 4G rollouts in this country, the growth of data use, and American Tower has been allocating money overseas into emerging markets. Think about Brazil, India, places in South America. We feel like their growth profile will continue for the next 5 to 10 years.
Tell us a little bit about your next pick, Encore Capital Group, ECPG, trading on the NASDAQ.
Sure. Encore is the small cap name, about a $1.1 billion market cap. It's a specialty finance company. It too has begun to expand overseas, first in Great Britain and now continental Europe. Encore buys defaulted consumer credit card debt from the credit card companies. They buy it for pennies on the dollar. They service it in-house. They service it both in the U.S. and India. And Encore today is trading just 9 times next year's cash earnings. We think it's one of the most undervalued stocks in the fund today.
David, a broader question about the market now. It was a volatile week, 5 days in a row of 100-point swings for the Dow. Should we make anything of that? Is it something to worry about? Is it just something we should get used to?
I would think over the next 6 to 9 months, as there's more talk about the Fed raising interest rates, that mixes with a slowly improving job market in the U.S. So the market's kind of torn between two places, if you will. Rising interest rates are generally never good, but accelerating domestic growth is very good for the market.
All right, David, thank you so much. David Rainey with the Hennessy Focus Fund.
Coming up, what do chief executives do in their spare time? I'll introduce you to a Fortune 500 CEO who goes from the boardroom to the silver screen. On Fridays, we sometimes like to show you what top business execs do on their own time. Tonight, Thomas Farrell, CEO of the Fortune 500 utility, Dominion Resources, and by the way, a classmate of mine at the University of Virginia. By day, Farrell runs a company with 15,000 employees, operations in more than a dozen states, and more than $13 billion in annual sales. But on nights and weekends over the past few years, he's been pouring his soul and a hunk of his own cash into this field of lost shoes.
It's not a documentary. It's not a set piece.
Field of Lost Shoes is a historically accurate major motion picture out this week. It tells the story of 250 cadets from Virginia Military Institute in Lexington. In May of 1864, with the Union pressing down the Shenandoah Valley, they marched 90 miles north over 4.5 days through torrential rain to reinforce a fraying Confederate line. They ended up here in this field, Bushong's Farm, near Newmarket, Virginia. Here on May 15th, 150 years ago, the schoolboys, average age 17, fought, 10 of them died, for their state and the Confederate cause.
They were good at parade, but these were not hardened veterans.
And Farrell was not a movie producer or a screenwriter. Now, he's both.
My great-grandfather, my grandfather, my father, uncles were all career Army officers. About 30 years ago, I went on sort of a Civil War binge, and I came across this story of these Newmarket cadets.
Farrell started toying with making a movie about them roughly 10 years ago.
You know how to build pipelines, you know how to run nuclear plants, you know how to do a lot of stuff, but you don't know how to make a movie.
No, I don't actually know how to run a nuclear plant.
Yeah.
But my job is to get the people together who do know how to run a nuclear plant and how to build
and make sure they're doing it right.
And make sure they're doing it right. And that's what a producer's job.
How did you fit this in?
That's what nights and weekends are for.
You'd never written a screenplay before?
No.
Never written anything like it?
No.
How hard was it?
It was hard.
If you don't believe in what you're fighting for, you won't make it out of this valley.
The movie's about the boys. It's about 7 boys, 6 of whom were real cadets. The 7th one we made up as a composite. We call him the Rat in the movie.
The youngest.
The youngest.
I will fight Grant's bully, sir.
But all the rest of the characters, all the adult characters, are all real people.
John C. Breckenridge. John Wise, sir.
Like General John C. Breckenridge, the Confederate commander and one-time U.S. Vice President, played by Jason Isaacs of Harry Potter fame. Despite his grave reservations,
you must put in the cadets.
He orders the cadets into battle.
That's all he had left.
All he had left.
15-year-old boys.
Send the boys in. May God forgive me.
Come on! They paused here at this fence line. Hardened Pennsylvania veterans firing at them down here. These young boys led the charge up this hill and ran through a sea of mud. Mud was so deep that it sucked the shoes off their feet.
But then, very quickly, they got an education. And they are in hand-to-hand combat.
After the battle, down here in this area, there was a whole bunch of shoes. Hundreds of shoes. This area here has been called the field of lost shoes for over 100 years.
Breckinridge and his unlikely troops prevailed. For the Confederates, outmanned 2-1, it was a remarkable victory that delayed the inevitable ultimate defeat. For the VMI cadets, a day of honor commemorated every May 15th by a new generation of VMI men and now women.
Robert Jefferson, down on the field of honor, sir. Robert Dale, down on the field of honor, sir.
For Dominion CEO Tom Farrell, the movie is the realization of a dream.
What are you going to do now?
Going to go back to my job.
Why did you do it? Bottom line.
The bottom line, Tyler, is I thought it was a story that deserved to be told. I thought these boys deserved to have the story told. And we tried to tell it in a way that we think they would like.
And the film opens this weekend in limited release in 20 or so markets. Farrell would be the first to tell you he didn't do it alone. His co-screenwriter David Kennedy was another college pal, as were some of his co-investors on the project. Interestingly, Susie, he said there were very few people at Dominion who knew about this. His secretary and, of course, his board, who he wanted to know what he was doing in his spare time.
It's interesting that every war has these little stories along the way that are big stories, and it's interesting that he discovered this one. What did you think of the movie?
The movie was very good. My son, who is 8, absolutely loved it. I thought the performances were very, very nice. And I have to say, this was the only time that I know of in American history where schoolboys, cadets, were put into battle.
Well, I'll go see it.
Yeah, go see it.
Sounds like a good movie. Well, that's it for tonight. I'm Susie Garrett. Thanks for watching. Have a great weekend. Go see the movie.
And I'm Tyler Matheson. Have a great weekend, everybody. We'll see you back here on Monday.
I'm Susie Garrett with a nightly business report news brief. Stocks on Wall Street roared back after their worst session in nearly 2 months as investors welcomed good news on the economy at the end of a turbulent week of trading. The Dow rose 167 points, or almost 1%. The Nasdaq surged 45 points, and the S&P added 17 points. Helping out, the Commerce Department's report that the economy grew 4.6% in the second quarter, much stronger than the prior estimate. And Bill Gross, known as the Bond King, is leaving Pimco, the firm he founded more than 40 years ago. He's heading to Janus Capital Group, where he'll manage a new bond fund for the much smaller firm. Gross's sudden exit sparked a knee-jerk sell-off in the Treasury market. Be sure to tune into Nightly Business Report right here on your public television station.